So this is Euro Pound analysis for Monday 30th of October. Now, before we do the analysis for the 30th, let's just have a quick look at what happened with prices on the 27th. So on the 27th, we did see prices, on the 26th, we did see price come down to this 88.50 level. We did say we expected further downside momentum in light of the catalyst in regards to Euro being a continuation of QE to September 2018 and the ECB's willingness to act if there's further weakness within the Eurozone. Now, we did find the technical support in around 88.51 level. As you can see, we've got a perfect touch from 88.51. We've not traded much beyond it. And we did see buying momentum come back into the market. We did expect a touch of 88.73, see how prices react. But beyond that, we were looking at 89 level again. We've come to the 89 level and briefly broke above it by, was that 1 pip? Yes, by one solitary pip. And we've seen the selling momentum come back into the market to break below this 88.50 level. So it's a very common thing sometimes for prices to break above, find support of a level, retrace upwards, and then come down and break the actual level with some selling momentum. So on this occasion, we've seen selling momentum come into the market, and we have broke below the 88.50. So where do we expect prices to go? Now, let's just get the scale on here correct. Now, we've broke below the 88.50, so we have to look at the 88.50 as potential resistance at present. So we could potentially see prices retrace all the way back up to the 88.50 to test it. The support acting as resistance. We could see a breakdown of prices all the way back down to this 88.20. It's not a very big zone, down to this weekly pivot at 88.20 from 88.50. But that's where we might potentially see some minor support. Again, if we do not hold this 88.20, we'll be looking for the next major level of support in around 87.83, which again will be a much bigger zone to trade towards. But 87.83, but we just have to bear in mind this 88.20. So 87.83 to the downside, beyond which we'll be looking for the next major level in around 86.63. I wouldn't anticipate 86.63 being hit on Monday the 30th of October, but 87.83 is definitely close enough to come into focus. Now, if we do see a further retracement in prices, we could again see prices retrace. Say we do break above this 88.50 level and we do hold it for a while, we could potentially see prices move up to 87.73, beyond which we'll be looking for a possible double top in around the round number of 89 for further selling momentum, taking us all the way back down for a test of 88.51. So that's what we're expecting. We're expecting further continuation to the downside. We might see a retracement. We're looking at retracements turning around in around major levels of the 88.50, 88.73 and 89. Now, if we have a look at the higher time frames, let's see where we are. Let's just get this scale on here correct. So on these higher time frames, we can see that let's just grab a pen. We can see that we're clearly in an uptrend. We have, however, come into some resistance where we found some selling momentum in the past in around this level. Now, we did say this candle here, this large bearish candle that we saw in September, was of concern, as it is an engulfing candle in the overall trend. We did see some retracement all the way up to this 90.24 level, so in and around. I suppose if I get a Fibonacci on there, it might just be a 50% retracement actually. I tend not to like drawing Fibonaccis on these small charts because it can be a bit difficult. But let's just give it a go. I'm just going to give it a go as it is Sunday analysis. So if that's our first Fibonacci, and there's the bottom of our Fibonacci. Yep, there. If it loads. So there's the bottom of that zone. So let's just get the zoom in on here correct. See, it's going to become distorted. So we did see this 90.24 level did fall in between the 50 and the 61.8 Fibonacci retracement. We did see prices retrace from this large bearish engulfing candle. We did retrace all the way up to in between 50 and 61.8 Fibonacci before we saw some selling momentum coming to the market. Yes, we did see we retraced through all the way there before we saw some selling. There we are. That's more accurate, isn't it? Oh, honestly, we did see prices retrace all the way back up there before we saw some selling momentum coming to the market. And yeah, we do seem to have the continuation in light of the bearish engulfing candle of September. So at present, we still are bullish for the month of October at present, but we do seem poised to end it as a bearish month with a pretty sizable wick to the upside, which indicates that despite the bulls' best efforts to drive prices up, the bears were able to take control and drive prices back down. If we do close them off bearish, that's another pretty strong signal that we are having a shift in momentum. Now, we obviously we pretty much don't often pick tops. We pretty much just trade continuations, and this is an uptrend, but we do have a noteworthy catalyst, this bearish engulfing candle from September, the selling momentum that we've seen in the month of October so far, coupled with the ECB's outlining their policy for the medium term, and their policy does appear to be euro bearish. So all those factors combined, we could potentially looking at counter trend trades here on the larger time frame, on the monthly time frame, at least down to these levels in around these 84. The round number of 84 could potentially price to retrace all the way down to 84, or even beyond that down to the 83 level over the medium to long term. Now, if we do have a look at the weekly time frame, see where we are. So on this weekly time frame, again, we can see there hasn't been really the shift in momentum as of yet on the weekly time frame. We have to bear in mind that it will take time for the catalyst to filter through. So we have had a move up and posted a higher low, went in this consolidation, had a bit of a, I think it's like a wedge they call it, form. We've had a breakout. We've got a bit of a double top in and around this region again. We've got this strong weekly candle here. We've been operating in shadow of that weekly candle, and since then, what we've seen is, let's just get the charts cleaned up a bit. Instead, what we've seen is prices come up to this 90.24 level on 2 consecutive weeks. We weren't able to close above that level. We've seen sell-offs from this 90.24. Last week, we did not go up to retest this 90.24. Instead, we had a brief move upwards before we saw some selling momentum coming to the market, and we did close near the lows, indicating we expect further continuation to the downside. So where would we expect prices to go? Again, the next major level we are looking at is, if I can get this, I guess my pen doesn't want to be compliant. Spare with me a second here. The next there we are. Next major level is all the way down to this A7, A3 that I've mentioned already, and beyond that A663, and also beyond that we're looking at A513. But I can't anticipate price getting all the way down to 85.13 on, especially as we are looking at the weekly chart here on the 30th of October. So those are medium to long-term targets. Now, if we have a look at the before we have a look at the daily time frame, let's just get this scaling back up to scratch. So on this, so we have had a double top, and we've seen prices retrace, but this do seem to have had a turnaround. So we're going to break back down. It does appear that we're going to break back down into this this zone here where we've had a bit of a range. We do seem poised to re-enter that zone. Let's just have a look at the daily time frame. So here on this daily time frame again, we've seen prices trade all the way up to this 92, well, it's a 93 essentially, and we've had a turnaround in prices. Prices have seemed to have found support previously in around this 87, 83. and we have found resistance around this 90.24. As we can see here, this could be interpreted as a double top here on the daily time frame. We've had a sell-off from 90.24. Again, we've had a sell-off again, and we've had 3 consecutive days of pretty strong bearish momentum. We've had moves to the upside, but the bears were able to take control of the market and close the day bearish. And the fact that the candles have closed near their lows indicate some strong selling momentum. So we are expecting prices to retrace all the way back down to these levels here, beyond which we've also got the 200 period moving average. The 200 period moving average sitting on the daily charts currently sitting on 8754. Beyond which the 86.63 would come into focus, and beyond that, before we get to 85.13, we've got a 400 period moving average sitting at 85.70. So those are pretty much the levels I am looking at. So that should wrap up the Euro Pound analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.